Hello, folks. It's Owen McCafferty again. It's getting to be that time of year. The leaves are turning, at least up north. The temperatures down south are becoming phenomenally enjoyable. And it's time to talk about two things, fee increases and salary increases, or wage and hour increases is probably a better way of saying it. This is the time of year, especially with our stagflation at a horrible level, and the attempt of people just to get by, because it's not as easy as it was at one time, to maintain a standard of living and provide an income stream to your family, and from the standpoint of employers, to pay a living wage. Now, let's just look at the very simple theme of this discussion. You can't increase wages without increasing income. Income has two components. It has a volume component and it has a pricing component. In a stagflationary economy, the volume component is diminishing. So that means that the pricing component is probably going to have to increase at a greater rate than the inflation rate to make up for the difference of a decrease in volume. Now, you may be in a practice situation where that's just not the case yet, but people are expecting increases, and maybe they're not too vocal right now because it's only November, but by the time December hits and as we look close to January, where people somehow confuse a theology with a capitalism, and that is Christmas bonuses. The theology is obvious, but the capitalism is a mismatch. You have a salary increase or a bonus based upon productivity. As we've said before, a bonus is really a mistake. It's a mistake that I haven't paid you enough throughout the year, and I'm making up for the difference now. So we have to make a decision in every practice. Are you going to pay morally throughout the year? Are you going to pay less than fair wage? And then at the end of the year, pay a bonus. If you mix your metaphors, if you pay a moral fair wage throughout the year and then have a bonus, you have to have an extraordinary improvement in gross income that was not anticipated. Rarely does that happen. We all get caught in this Clark Griswold theory that we need the bonus to put up that brand new pool. And the fact is that bonuses, like everything else, are earned. So here's the first part of this message. Number one, if the volume changes, you're going to have to make up for it with an adjustment either in an expense and cost or a level of income. So let's focus in on the income. If you are looking for an increase in wages that'll occur in January, we got to really start talking about it now. We really have to have our budgets in place. We have to look at where the costs and expenses are expanding, because I can assure you they are expanding in areas that you haven't even thought of in a stagflation. But the first issue is we're going to have to be dealing with a fair and equitable wage. Now, you got a choice. You can have an increase in your wages if you not only increase income, but you decrease cost. I've had some clients who have said that I have to increase the wages to people that produce, and for the people that don't produce, I have to outsource them. So one other way of gaining the capital to have a salary increase is to really look at those people that aren't producing and provide them with another opportunity at another practice. And that's an unfortunate and a very uncomfortable discussion. But in the mid to end levels of a stagflation, it becomes far easier. My point is that if you have to do that, it's better to do it sooner rather than later, because then those people that are outsourced have a better probability of finding employment elsewhere. So we have to just be proactive in this. I'm all for increasing wages, but you got to increase your income coming in. And the easiest way of increasing the income coming in is increasing price. But in order to increase price, you have to deliver more than what you're doing right now. People need to expect that there will be more for what they're doing. Your clients, your patients, they have to feel that. Some of you are limited based on reimbursement through insurance. Others are not. There's a lot of private pay dental practice groups. Veterinary medicine, for the most part, isn't shackled with insurance. It's about less than 2%. For the most part, maybe 2.5%, at least in the United States. Now, in England and Europe, it's quite a bit more. It's like 25, 26% last time I looked. But here in the United States, for veterinary medicine, insurance is very little. So the limitation in what you can charge is based upon what colleagues are charging for similar things. You can distinguish what you're doing by better availability, more articulate status, senior doctors, and it's easy because if your practice is close to an aggregating practice, which generally doesn't have as experienced of doctors, but charges what I would call super enlightened fees, it's easy to place your practice. But if you're shackled with being in an area without the classic aggregators, it's going to be more difficult. So those of you in dentistry have somewhat of the same story. And in human dermatology, you're going to be limited to, at least to the extent of those things that are reimbursed through third-party payment to a scheduled list. But you have to at least think about it. Think about where things are going. Now is the time. You have a volume and pricing sensitivity feature. And you got to think about it, because when the flood of people come and say, I need a raise, you better have an organized structure, or you'll be adjusting across the board for everybody and diminishing not only the dollars that are available for profit, but the effects in terms of the earnings before interest, taxes, depreciation, and amortization that are commonly recognized as part of the EBITDA used in the capitalization feature for calculating total practice entity. It's not valuation per se, it's nothing more than a rule of thumb for transactional purchase, usually by third parties, and often private equity groups that are funding a large corporate entity. So I just want to throw those things out. A lot of you will be tempted to just increase across the board in fear that you'll be losing people. And you'll be able to do it in the first part of a stagflationary economy. But as I said before, once you get to the mid part and towards the end, it's going to be impossible. So decide who you want to keep, pay them super well, keep your core, but remember that you're going to have to be facing a volume, a pricing, or an expense/cost adjustment. So these are good times, things to think about. We'll be going through the good as well as the bad, the uncomfortable, but the one thing to remember is that there is opportunity. One last word, I see an optimism occurring. I think people are really trying to do the best that they can and are starting to learn what it means to be in a stagflationary economy. We'll see what happens. This next year is going to be very interesting. And we'll be there with you, providing ideas and thoughts in the real world as I'm tackling these issues with our clients. So this is Owen McCafferty. On behalf of Professional Fusion, I want to say thank you, folks. And we'll be seeing you in a future one. Take care.